going on, boys? Charlie here with another video. This video is going to be pretty exciting, actually. I'm going to take the entry model that I use right now, okay, and the entry model itself is a very stupid, simple entry model. You have to pair it with context, of course, but the entry model itself is very simple, and we're going to go back in 2016, okay, which is 10 years ago, and we're going to test it. We're going to test last month, which was May here. So we're going to go back into 2016 and test this entry model and see if, again, NASDAQ can perform. And I have tested February of 2016. I've pretty much tested from January to April of 2016, and I have to, continue getting that data. I've been obviously more focused on getting the most recent years of data, but as we just closed out May as last month, and I figured, why not go back in May of 2016, 10 years ago, and go see if my entry model still plays out. Okay, so to break some things down for you guys real quick, just to show you guys my entry model very simply. Okay, you want to find trending markets. You want to make sure the markets are trending, right? And when you're trending like this, okay, putting in higher highs and higher lows, all you're looking for is price to come down and take opposing liquidity. Okay, and when we take opposing liquidity, we draw out our demand zone, and if there's a demand zone here while we take opposing liquidity, we have strict rules we have to adhere to, right? The candle can't close inside the demand zone or anything like that. But if everything checks out, then we're perfectly fine to long from there and continue trading with the trend. Okay, now why does this entry model work? This entry model works because when you're trending bullish, we have to seek opposing liquidity. Okay, and opposing liquidity comes from internal higher lows. Okay, there's internal liquidity here, there's internal liquidity here, there's internal liquidity here. And at some point in time, we can't just keep longing forever without taking any opposing liquidity. So what happens is we retrace and take out this liquidity, this massive bulk of orders that's resting under this higher low. And when we take that out and we pair that with a demand zone of buying pressure, and we get that buying pressure and everything aligns, that is when we take that trade and pretty much everything's aligned and we follow through with that trend. You take this in longs, shorts, whatever you want to take it on, as long as it's within trend, right? And as you get in more advanced, you can take them slightly, maybe counter trend of the 1 hour, but because you're trading this on the 5-minute time frame, so you can kind of measle your way around as you kind of get more advanced, and you can take some more riskier type of trades, but that is the base core of it. It's very simple. Okay, so that's pretty much it, boys. We're going to go back into 2016. So I'm going to set this mic down here, right here, and we're going to click replay, and we're going straight up into 2016 here. So go back 10 years, 2016, and we're going to go to May here. So May 1st, and again, we're going to candle by candle backtest this all throughout May here. So my session currently is it is 4:30 a.m. to 10 a.m. Eastern Standard Time. Okay, so you guys are going to see me play this out fast until we get to that 4:30 a.m. mark. Okay, as you can see, there's a trade here, but it's not like in my session at all. So I'm not going to be going over those trades. It's purely going to be the trade that's in my session. So you can see my session indicator started right now, and these are the trades that we're going to go over. And the entry model, it is coded slightly. Shout out Myrtle, he coded this, okay, but it's not one of those strategies that you can just actually code head to toe and it actually works that way. This is a strict code. All it's doing is it's finding supply and demand zones with valid liquidity in front of them, and that's it, right? But every single setup ranges very differently, and you have to pair your actual context onto it. So it's never a strategy that you can just code head to toe by any means. So yeah, if you could code your strategy head to toe, then that's not honestly a good thing by any means. You have to have your human edge with it. So yeah, I'm just explaining pretty much what these boxes are and why they pop up the way they pop up. This day we have news here, it looks like. Maybe not. Thought we had news. Alright, nothing that day. So this is just, again, this is NASDAQ alone. I trade 7 pairs currently. Yeah, I trade 7 pairs currently. Okay, so the whole point is like, you know, you can go a month without taking a trade on a pair easily. That's the whole point. Oh, you gotta be kidding me. I don't know what happened. I don't know, we'll just keep going. That's the whole point. Like, you can trade it, you can go a whole year without, or I mean, not a whole year, gosh. You can go a whole month without taking a trade on a pair, easily. It's out of session now. And that's the whole point of it, is because you have so many pairs that it kind of offsets each other, right? You know, a pair can have a slow 2 or 3 months while another pair can do really, really good. And again, you have 7 pairs. So, you know, the whole thing is you can go, NASDAQ can give, you know, 1 to 2 trades in a month. And that's great, because then you have your other pairs. And if your other pairs are giving the same exact thing, then you end that month with, you know, 10, 12 trades before you know it. And I target strict 1 to 4s, so that's my targeting kind of system. That's what I found that works the best over years and years and years and years of testing. I've tested strict 1 to 2s, strict 1 to 3s, and strict 1 to 4s. And strict 1 to 4s is your highest P&L by far. So yeah, and with a lot slower of a type of a strategy, that's the whole point, is to catch big risk rewards. So it'd be pointless taking 1 to 2s when 1 to 4s, quite frankly, perform way better. And your trade count isn't like, you know, you're scalping and taking multiple trades a day by any means. So you have that luxury of being able to target strict 1 to 4s. Hasn't been anything yet, but we'll see. This day we actually have some zones here, so this is valid. From here, price is definitely starting to shift up to bullish. I don't want to go to a higher time frame because it's gonna kind of reset all my stuff here. But price is trending bearish. We have started to take out highs here, and we have started to make lower or higher lows here, while also taking out these last highs and putting in higher highs here. So price is looking a lot more bullish as of recently, and I really do like the setup because beautiful demand. Lots of this is just straight consolidatory type of liquidity here. So this is for, you know, 3 hours of just straight sideways liquidity here. That's really all that is. So I really do like that. That is not bad at all. Asia low isn't really near us, so I'm not really concerned about anything like that. We've taken previous day high. We haven't manipulated it by any means. We've displaced pretty nice past it. So this isn't a bad trade at all. And I will use those extra concepts that I kind of used, previous day high, Asia low, all that stuff like that. That stuff's in my Discord. Okay, that's the stuff I teach in my Discord. As of right now, this video, I just want to use kind of the entry model and show you guys the back testing. I'm not trying to go super deep into that. I don't put too much of that on YouTube, but we're gonna see if we get, okay, this zone below isn't bad either. This is actually probably a better zone, if anything. If we get a valid candle here, because we've gotten a very strong reaction here from taking this liquidity, we are bullish, very far overextended, and again, this is an actual deep retracement. You know, you guys can see how price runs up, big retracement. Price runs up, big retracement. Runs up, big retracement. What do? Run up, big retracement. And it's kind of following, you know, these higher lows that we've been consecutively putting in here. So this trade isn't looking bad at all. I'm gonna see if we have a break of candle entry on this next candle. I would enter break of candle. Just putting that out there. We'll see what we get. Okay, candle close. Then I will enter candle close. That works just as fine. There's a couple different entry candles you use: break of candle, candle close, or a candle flip. Flip is just when we tap into this, and if this would have flipped bullish, then you can take a flip. Break of candle is when we literally just break the last candle's high. So whether this last candle had a wick or a body as a high, as soon as we take out that high, we enter, and our third entry is just a bullish candle close. Your candle close is your most common one. So yeah, from here I'm taking a strict 1 to 4. So TP's up here, which is pretty big, but you're in trend now. You know, you're in trend. You clearly manipulated this really strong level of liquidity. This is clearly a really deep retracement. So I'm fine taking this trade. And that trade hit TP. So there you have it, 10 years ago, the same entry model playing out. Yeah, at 9:30 open though, it can get really volatile and it can stop you out. So if you're, you know, near stop loss, I wouldn't recommend holding it through there. But we are fine because obviously it was, you know, not near our stop loss there. So there's actually a really nice trade right there. If we come down, it's creating another nice trade. There's two nice trades here. Okay, this candle is, yeah, okay. I was gonna say this candle is fine for a flip because it's new after New York Open. I played that way too fast. I'm sorry, guys. Let me explain this trade just a little bit though, without going into too many concepts. Again, I explain things a lot deeper in my Discord, but we obviously have a deep retracement. I'm gonna go to a slightly higher time frame here. Let me bar replay this so we don't skip too many candles here. Okay. Yeah, so from here, very nice imbalance within the market that we've retraced to. And from after we retraced there, we now are starting to give bullish market structure again. We retraced to that imbalance. We're holding this as support. We're taking out these last highs. And what are we? Well, we're in trend again. We're completely in trend. This is completely a bullish trend. So from here, you have two things. You have this very strong level of liquidity, which is perfectly fine. And if this fails, then you also have this level of liquidity down here as well. Both of these are very strong levels. And again, right here, New York opens. Okay, New York's very volatile. So from here, us completely manipulating that level of liquidity, really strong like that, if we had another candle that from here open and just straight bullish buying pressure, you can't enter there because you would be entering on something like this where that candle would close bullish and your stop loss would be the whole way down there. You just can't do that. But what you can do from here is if you get another tap in and you can get a flip entry, that is your next option. And that's genuinely what you get. You get another wick coming down and you get that flip entry. So this, I would be completely fine with taking a flip right here. I played a candle too fast because I didn't think that candle would actually, you know, be that volatile. But that is a completely valid trade right here. Notice how right here we didn't take liquidity like with this wick and run up. The liquidity is still resting, and all we did was we took it right there. Boom, we got a massive reaction from that. This next candle opened, we just put in that lower wick and we came up and flipped to bullish again. Okay, we're in trend and we are now taking out, these are our last highs right here, these are our last lows. We've taken out our last lows. We're putting in consecutive higher lows now. And this is your last high, and we are now putting in higher highs here, and we are completely in trend. We're bullish, so there's really no reason to overthink anything too much at all. Any session highs or session lows are not near you at all, so you're completely fine there. And if you take this as a strict 1 to 4, stop loss goes right under that wick, flip entry again as soon as this flips bullish. And if you take that to a strict 1 to 4, it should be right there. Pretty confident in this trade, but we'll see. That trade ended up hitting as well. Ended up hitting, took out these even highs right here as liquidity, and then we chased deeper liquidity, and you would have gotten stopped out if you would have, you know, held for crazy TPs. But 1 to 4 already is absolutely insane, so that is fine with me. But yeah, we'll go to the next day here. That's 2 trades 10 years ago. It's really cool seeing this stuff play out 10 years ago. It really is. Yeah, I can't explain it. 10 years ago, to see a simple entry model like this, for example, the code picked this up. This is a trade I'd never ever take at all. It's really not even valid. But it's really cool seeing your entry model genuinely play out 10 years ago. And, you know, still plays out the same to this day. So it's really cool seeing that. Nothing any of these days. Okay, here's my session. Zone right there, it's not tapping. I'll redo that. Alright, nothing that day. Start my session. Okay. It's looking very nice. Very nice. We get a bullish candle close. Very nice candle. Okay. We don't have news until 8:30. It is only currently 5:20 a.m. We are bullish. A bit overextended. It's not my favorite, but we are bullish. Overall trend is bullish. You guys can even see on the massive time frames these massive swings right here. This is your last high. We've taken this high right here, right? And this is your last low. Starting to make a higher low right here. So trend's definitely switching from bearish to now this bullish trend. If you really, you know, look in the higher time frame, but things are in line. Let me check something real quick. We do have a session low below us, but I'm not really too worried about that. With it being that low, and this is really already overextended. This is great liquidity right here. This isn't like 2 or 3 candles of liquidity. This is great liquidity that, you know, this is pretty much consolidation lower for about a solid hour before we started getting bullish momentum back in, and we fell pretty hard. I really like that reaction candle. And we are bullish. I'm not really worried about us like not taking that high or anything like that. That just builds more liquidity for you to go and take. Yeah, I'm not minding it. It's definitely not like the best setup. Just based off kind of the looks, but it is still a bullish trending market with the demand, with the level of liquidity. We've came down really, really hard. I think the main thing throwing me off is just this lower high right here. But everything else checks out, and there's really no reason to skip this. And if this loses, you know, it's a standard losing trade. It is what it is. There's really no reason to overcomplicate it. So if it loses, just standard loss. But you're in trend here, so there's really no reason to overthink it at all. So we'll play this one out and see what happens here. This one ends up losing. Okay, so standard loss right there. Like I said, it is what it is. You know, you'll have those for sure. So yeah, this one ran up right to that imbalance, and it did end up continuing down. Like I said, live market, me personally, right, it's a lot easier to say this when you're back testing, but live market, when you have a high like this and then a lower high, and then you're in this trade longing and you see that third lower high get built and you're coming right back down, I would personally just see that and be like, okay, well, this is bearish price action. I'm just getting out of break even. But in back testing, obviously you write that down as a loss, of course. But live market, I can tell you, when you kind of just like can judge the trade as you're in it, that can save you like a loss as well. So that's the standard loss for value gap right there. Kind of got filled, and then we ended up continuing down. So that's pretty much it. We have news at 8:30 here, so we'll let this pass. It really didn't do anything at all. That's technically valid, but I'm gonna let that go because I don't know why. Was that news? I don't think that. No, news was at 8:30. I mean, that'd be valid for a flip, but it's very. I'm just gonna let that one go. To be fair, very strong volume there. Yeah, very strong volume there. I'm just gonna let that one go there. So we'll go to the next one here. I might honestly update you guys when the next trade is, because it's gonna be very long. I mean, we're already at 21 minutes. It's gonna be a very long video of me going through candle by candle when there's there might not be any trades. So I might just fast forward to when there is. Let me make sure there's nothing for today. And if there's anything that I would skip and it's worth going over, I'll go over that. But that's what I'm going to do. I'm just going to fast forward. And I guess I will catch you guys whenever the next trade pops up here. Okay, this is a valid trade. I'm actually really liking the setup because price is bullish. Normally I'd be worried about that gap, but that gap already got filled here. That gap already got filled here with that candle. So I'm not really worried about that gap anymore. Pretty much everything's aligned for bullish price action. And again, that comes back to my basic point. If we're bullish, we have to take opposing liquidity, which is right here, to then continue up. So yeah, we're gonna see where we get there. Okay, that didn't quite close inside of it. I don't know why the code turned off. Okay, that is a valid trade. The code kind of has an issue when it closes on it. When it closes on it though, it's still perfectly fine to take that trade. It's just the code being a code. That's pretty much it. Yeah, if you guys look, I'm trying to read it here. So if you guys look at this candle, if I hover over this candle right here, if it's on this candle's high wick, it's completely valid. It just can't close inside the zone, showing that's disrespecting the demand zone. So the code, it doesn't quite pick that up. But if you guys look at this candle right here, and you go up in that top left, and I can't move my cursor because it's gonna go on a different candle. But if you go and look where it says L, right, that's the candle's low. It says 513.80. Okay. And if you go at this candle you're going to go at the high, it says the exact same thing. It says high 513.80. High is the H. So that's the candle's high. This is the candle's low. It's literally the exact same price point. It's just the code not picking that up for some reason. I don't know. But this is a valid trade. And then this candle moving like that, yeah, I'd definitely be taking break of candle here. But yeah, this is a valid trade. I'd be taking break of candle here. Let me see what's kind of going on here. Yeah, so your main session liquidity already got manipulated down here. Previous day highs already taken. All you have is just a simple London low below you, and that's really not worrying me at all because this gap was already filled. This is the main thing, is this gap fill, and this gap was already filled while taking this low as liquidity, and now everything's aligned for bullish price action. And what do you have to do in bullish price action? It's constantly seeking opposing liquidity. So this is one of those trades that pretty much everything's aligned, seeking opposing liquidity. Some weird candles right here, but it's completely valid. Stop loss goes right under those candles, and your break of candle, you'd be targeting a stroke 1 to 4. If I can get it close enough. Yeah, I mean, everything's aligned here. So again, if this loses, it's a standard loss in my opinion, because realistically everything's aligned. Bullish price action, strong liquidity right here. Beautiful liquidity, comes down, takes that liquidity. Great reaction, never close inside the zone, just right on the top of the wick. That's completely valid. We just can't have it close inside of the zone. So from there, that's a valid trade. So yeah, we'll see what happens here though. And CP got hit again. So that's what, 4, 8, 12, and then we took one loss, so that's 11% just on one pair 10 years ago in May. Very cool to see. We have one more day to do here, so I'm just gonna go through this last day, see what this brings. It's looking like nothing. There's no liquidity there at that level at all. It's just completely invalid, just the code picking it up. And it's out of session, so I'm not looking at that trade. Would have got stopped out anyways. That's why you have to have strict session rules. That's it, boys. That is it. So that is genuinely it. That is NASDAQ 10 years ago. 10 years ago, on the 5-minute time frame. 10 years ago, and yeah, still playing out the same exact entry model that I use now. Same exact entry model that I use now. And a lot of you guys that watch my videos, you know, and you probably trade the exact same entry model I do. So there you have it. NASDAQ 2016, May, doing the exact same things. January through April, absolutely great results as well. Like literally great results. And yeah, May did another 11%. We had 3 wins, just simple high quality wins. That is it for NASDAQ 2016. Yeah, that's pretty much it. Again, it's really cool seeing this stuff. It's really cool. A lot of guys don't have I mean, you have to have, I got the TradingView subscription to actually, you know, go back into 2016, because it's a lot to go back 10 years candle by candle on the 5-minute chart. I mean, that's a lot, you know, not a lot of subscriptions, you can't do that. And it's worth it, in my opinion, to go back and look at this stuff, because it gives you a lot of clarity, because it's like, okay, yeah, my strategy worked for the last, you know, 4 or 5 years I have tested, but like, did it work 10 years ago? And it does, bro. It literally does. It works the exact same. Supply, like this liquidity, supply and demand is universal. Like this will never, in my opinion, just straight up go away. You have to have markets trending and taking opposing liquidity. Like that whole concept will not just disappear overnight randomly. Like, of course, you're going to have dry periods for your actual like model, right? The model might only show up a lot drier some months, or a lot more trades might be invalid. But the whole theory of taking opposing liquidity and tapping into demand, that is just like market 101. Like that is something that's always constantly be happening. I saw it on like QQQ. You can see it on stocks as well. I had a buddy that actually told me about it, and he was like, yo, it works on stocks too. And I looked at it, and it literally, it's right there. It works on stocks, bro. It works on crypto. It works on futures, Forex. Like it works on all this stuff. It's a universal thing. You just have to find, you know, what best fits you, the best times you trade, and the best pairs. And for me, I personally think that I have found the best pairs. And I have 4 years of testing that I show, you know, all my people that are in my community that I've shared to them. I have 4 years of testing in every single pair on the 5-minute time frame on my session. But yeah, that's pretty much it, guys. That's it for this video. NASDAQ 2016. If you guys are interested in joining my community that I have, where I kind of throw all of this data in there, I teach everyone the actual concepts that I use and the entry model. I will link that below. If not, it's all good. I have, you know, some free content on YouTube. But yeah, that's pretty much it, boys, for this video. So I appreciate you guys for watching. If you think this is interesting, you guys want more of this, let me know, comment, and yeah, I'll see you guys on the next one. Peace.